Mavericks, happy weekend. This is Rob Reinhold, and this is the Trading Room. All right, in this session, we're going to go into the news of the week. We're going to take a look at all the numbers, and then we're going to flesh that away, and we're going to take a brand new look at the week. And we're going to go through all the sectors, score them from +3 to -3, and then we're going to find the best longs, sideways, and short trades in each of those sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, looking back on last week's news, we did get a breakout. Now, last week in the trading room, I was looking at the week ahead. There was a holiday on Thursday, and I thought, okay, you know what? We're probably going to base, and then we'll break out the next week. Well, the market has not listened to me for 27 years, and it decided to break out on Wednesday on a half day, and then we got some follow-through on Friday. So we have a clear breakout. This is exactly what I wanted to talk with everyone about because the market breadth is not great. The volume hasn't been great. There are a lot of reasons to doubt this rally. Let me tell you what I've seen over the last 27 years. Every time either myself or another trader has put up all the reasons why this rally shouldn't go any higher, do you know what usually happened? The rally went higher. Look, I know that there's some times where it's clear, okay, market breadth wasn't good, it breaks out and it falls back down. That does happen. But what I'm telling you is of the 100 times I've seen this, the better call was to be bullish. Because what happens is a lot of the time we get this narrow rally. So right now, only 50% of the stocks are above the 50-day moving average. And on Friday, we had an up day, and most of the day, less than 50% of the stocks were up. More than 50% of stocks were down. We barely closed above 50-50 by the end of the day. The market breadth is not great. But what happens a lot of the times is that a few big stocks pull it up, and then the rest of the stocks start to participate and the market broadens out. Now, it doesn't happen all the time, but I'm telling you, trust me, I could write an essay on all the reasons what's wrong with this market rally. I could make a very convincing argument. But I'm not here to make an argument. I'm here to make money. And the way we make money is to be on the right side of the market. So look, I agree with all of you that don't feel like this market should go higher. And in fact, here's another reason why this market shouldn't go any higher. We had slowing economic growth. We're going to take a look at the calendar here in just a second, but we had some really lousy economic numbers. However, the market cheered it. Why did they cheer it? Because now we're going to get rate cuts. Right here, we're in this very weird place where deteriorating economic conditions are going to be seen as positive. Now, if they go too far, they will start to be seen as negative. But for right here, right now, the market sentiment is very, very happy. So let's take a look at some of these numbers, and you will just see just how bad they were. We start out at the first of the week with ISM manufacturing. Look at these numbers. 48.5, so we deteriorated. Now, these numbers have been lousy for a while. This was the big number that really surprised me. This is the services PMI. It has been solidly above 50 for the whole time. The manufacturing ISM has been below 50 for a long time. People have just totally ignored it. Services are 2/3 of the U.S. economy, and a number above 50 shows growth, below 50 shows contraction. This was a huge miss. The expectations were 52.6, came in at 48.8. This was a terrible number. What did the market do on Wednesday on this number? Broke out to new highs. Now again, I know you're scratching your head. I know you're frustrated. Like, how can this happen? Don't ask how. Just get on board the train. We have a saying at Maverick, sometimes you got to plug your nose and buy. This is one of those times, okay? We have no idea how long it's going to last. We have no idea why it's doing what it is, but the market is going up. On Friday, we got an employment report that was actually the perfect report. So slightly more jobs created, slightly higher unemployment rate, and hourly earnings about the same as expected. This is showing that, okay, yes, things are deteriorating, but it's not so bad that people are losing jobs. And in fact, we're still adding jobs to the economy. This is kind of this Goldilocks that we've been talking about. And I want to keep throwing up this little chart. I know it's a dumb little image, but I want you to understand the market has a sentiment, just like we do. When you were in a good mood, let's say you had a great day, of trading, and you had some great music on and everything's going great, and someone cuts you off in traffic. You know what you do? You laugh it off. On the days that you have the exact opposite experience, you end up getting really upset and losing your mind. The same thing happened. You got cut off in traffic. One day you brush it off, one day you got really mad about it. Why? Because of your mood. The market has a mood. Right now, the mood of the market is happy. So good news is good news. Bad news is good news. And for right here, right now, that's where we are. And look, I hate it too. It doesn't make any sense. And the perma-bear in me just wants to scream at this market. But the charts are clear. And I have learned over the last 27 years, the charts trump my opinion every single time. Because guess what is right more than my opinion? The charts. All right, let's take a look at the numbers. And again, the numbers are showing everything. Dow, again, it's just 30 stocks, but hardly up. S&P up 2%. The Qs up almost 4%. The Russell down 1%. Look at that. I mean, that is just crazy to see that big of a difference between the market and the Russell. It's just showing you that large cap stocks are really popular right now and everything else is not so popular. Let's take a look at the S&P chart. And look, I know all the things that people are going to argue with me about. And look, and I will make the same argument so you can just keep it to yourself. The breakout happened on bad volume. You know what? You're right. The breakout happened on bad participation. You know what? You're right. But you know what? You can't deny that it was a breakout. You have to put an asterisk by this breakout and say, oh, but. Look, I used to do this a lot in my early years. I would find reasons to avoid rallies because I was a perma-bear. That's just who I was at the time. I never thought the market was going to go any higher because it's already gone up too much. So I would find reasons to not participate. And it really hurt me when I realized how much it was hurting me as a trader. I worked really hard to get rid of it. And now I use sayings like, I got to plug my nose and buy. I agree, it stinks. I agree. Guess what? If you've been plugging your nose for the last couple of weeks, you generally have been on the right side of the markets. Now, I want to show a chart here of the equal weighted S&P 500. This is the RSP. Yeah, the RSP is the ticker symbol. It's the equally weighted S&P 500. Take a look at this performance. We're below moving averages. We're generally going sideways to down a little bit. I had a question from a trader that said, hey, Rob, why don't we start using this to really show what's happening with the market? Okay. I agree that this is more indicative of what's happening today, but it was not a good thing to jump to this 6 months ago or a year ago or 2 years ago. And you know what? Somewhere in the future, it's not going to be good either. You can always jump systems. You can always jump things you look at when you're not happy with what you're seeing. But do you see how silly that is? That's confirmation bias. I don't like the data in front of me, so I'm going to go find data that I agree with more so I don't have to confront the data that is disagreeing with my opinion. It's a real risk that we have as human beings to want to go get data that matches our bias. So look, this is the truth, this is the equal weight, and this is showing what's happening. But if you've been using the SPX, the S&P 500, or the SPY as the thing you make your decisions off, don't change it now, because all you're doing is changing it to fit your bias at the moment. If you change it now, then you have to change it forever and never, ever, ever look at an SPY or an SPX chart again. That's the only way it will ever be acceptable. But if you are just looking at it right here, right now, because you don't like what you see in the SPY chart, all you're doing is lying to yourself. So let's keep going here. Here is the heat map. It's showing you everything. Half the stocks were down this week. Take a look at it. Everything in the bottom right is just red. Everything in the top and the left is green. That is the market. That's what's happening right here, right now. This is showing us everything we've been talking about. So here's the question, and I don't know the answer to it. We will find out. Are the rest of the stocks going to participate? Or are the high flyers going to sell off? Or is this going to continue? Remember, we have no idea which one of those three things that are going to happen. We have to make trades in spite of having no idea. Now, a lot of people say, well, I'm going to pick one and guess on it. Okay, you can. You may be right, you may not be right. But guess what? Why don't you just trade saying, okay, all three of these things can happen. So how do I make trades that are good in all three of these markets? And maybe not like profitable, but what could I do today that if two out of the three happen, I make money, and one out of the three happens, I take a small loss? All of a sudden, that's trading. It's not like I think this market is BS, I'm going to go short. Well, guess what? That's not how you trade. You look at the data and say, what's the best place and what's the best thing to do with my money right now? And if you decide cash is the best place, okay, go with cash. But if you're constantly missing out on rallies, you are doing yourself a disservice, just like I was those first couple years. I agree the economic data is weakening significantly. The market seems to be happy with it. At some point, if it gets too weak, the market will become unhappy with it. You will see that happen, and I will see that happen, and we'll talk about it in these videos. And we'll talk about, hey, it looks like we are now in a place where bad news is bad news. The sentiment is starting to wear off quite a bit. I think the biggest reason we're seeing this market move higher is money flows. Just think of all the money that's going into 401ks, IRAs, people having jobs, putting money away. Who is selling here? Who is selling? And the answer is not many people are selling. I don't think this is a real great rally. I just think this is an absence of selling across the board. Let's take a look at the calendar for the week. All right, we got some testimonies here. I don't think there's going to be much activity on that. I'm really looking at only one thing next week, the CPI. CPI on Thursday. Everything has been showing lower prices. We got the prices paid component in the ISM report was much lower than expected. We've seen CPI reports around the world starting to come lower than expectations. I don't see any reason why these numbers don't come in at or below expectations. And guess what? The market's in a good mood. It's going to like that. And I know you don't like it. But guess what? If the market likes it, you better get on board and like it. So this is the reality. We're still a +3. We've been a +3 for the entire last 6 weeks. 4 or 5 weeks. We went to a +2 briefly. So we've been at +3. This is just where you need to be. However, the sectors are telling you what is going on. And if you follow sectors, you're going to be in the better places with your trades.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
Now remember, over the last 3 weeks, we have had comm services, consumer, and tech as plus threes, and everything else has been kind of muddy. Take a look at what happened this week. Oh, what sectors were the best? Technology, consumer, comm services. Now I've liked consumer the best for the last couple weeks. It ripped higher, did really well. Let's go ahead and go through all of these sectors and see what their actual scores are. Starting off with utilities. Utilities weakened a little bit more. You can see last week we were trading about here. We weakened a bit more. So utilities weakened. They went from a 0 to a +1. Sorry, to a -1. So utilities have weakened a little bit. Here is comm services. As you can see here, comm services was a +3, breaking out to new highs, remains a +3. Real estate was one of those that was in the middle somewhere. I believe it was a +1 last week, and it's going to remain a +1. Or maybe got an upgrade for 0. I can't remember. We'll see that at the end. But real estate is just, it's in the middle. Now look, it has strengthened a bit over the past week, so +1 is an appropriate measure for this. Healthcare was looking like it wanted to do something, but then it utterly failed. And you can see here we failed, and we're now just between moving averages. This is going to earn a 0 on healthcare. Coming over here to industrials. Industrials actually weakened. So we went from a 0 to a -1. It's really close to a -2. It definitely weakened. So industrials weakened. Here we have financials, and financials did the opposite. It was at a +1 last week. It was a 0 last week. And you can see here, it popped up to +2. You want to call it a +1. So financials is the only sector that actually gets an upgrade this week on the board. We had consumer at a +3. It only got stronger. It only got better than it was the last week. Tech we had at a +3, but I said, okay, be a little concerned about it. It looked like it was underperforming. And you can see tech the last couple of days said, hey, you know what? The party's back on. I want to go higher. And then we have materials and energy that weren't participating, were already negative, and guess what? They just got worse. Materials fell to a -3 from a -2, and energy went from a 0 to a -1. So if we take a look at where we were last week, the only sector to get a bump up is financials. And then we had 5 sectors go down. Now think about this. The S&P was almost up 2%. NASDAQ up 3.5% on the week. We had 5 sectors actually get downgraded from stronger to weaker. The sectors are telling you the story. The sectors are telling you where to be. Yes, I know at some point this will end. I know it doesn't make a lot of sense to you. I get that. But this is the truth. Your opinion is your opinion, and it's a whole lot of things going on in your brain and all your biases. This is the truth. This is what's happening right here, right now. The question is it going to continue or is it not going to continue? You could have made a bet that it didn't continue 3 weeks ago and you were flat out wrong. If you keep making this bet, eventually you'll be right, but eventually you'll also be out of capital. So get on board, plug your nose. This is where the market is right here, right now. Let's take a look at our trade slots. So last week, we had 5 trades roll off. So what I've done here is I've put all the ones that have rolled off in red. Over the last couple of weeks, I've just erased them, and I thought, you know what? I think it actually makes some sense to show what rolled off for the week. So we had 5 trades roll off this week. As you can see, we have a -2 rolled off in energy, and we had 2 +3s. So as you can see, we had our most bullish trades and our most bearish trades roll off this week. And then last week, the green ones are the new ones that we put on for the week. So we have mostly in the middle stuff. The market is at a clear +3. So if it's a +3, these are the slots that we have available. So we cannot, even if we feel bearish, we cannot add more than 3 bearish trades. So we already have 2 negative ones. We only have 1 slot. That's the most bearish we can get. This is why I love these slots, is that it will force you. It will force you to not get overly bearish in a bullish market because you literally can't do it with the slots. Now you can be less bullish. So you can decide, I'm not going to add any more trades, or I'm only going to add +1 trades. You can definitely use the open slots to become less bullish, but you can't use open slots to become more bearish in a +3 market. It doesn't allow you. So this week, we're going to be putting on a trade in real estate, a +1. We've got a -1 in real estate. Real estate's a +1 sector, so let's go ahead and add something a little bit more bullish to that to pull that up. Financial is the sector that was upgraded this week to a +2. We had a 0. We have a trade right now on MARA that's just looking beautiful at the moment, but it's a sideways trade, so let's add a bull here. Let's go ahead and take a shot at tech at a +3, and we're going to be adding a negative trade on energy in a -2. Let's go find some potential trades in those sectors. First up is real estate. We want to get a little bit more bullish on real estate, and this is VTR, Ventus. Beautiful little high base pattern. This has been a very strong stock. We just spent an entire month going high base, and take a look at these candles. These candles, like 80 to 90% of them are green candles, but yet the stock didn't go anywhere. Every morning it gapped down and people bought it. Gap down, people bought it. Gap down, people bought it. Look at that. There's only 2 days is when they gapped it up too much and then people sold it off. But there were people buying it this entire base, and then finally, when they decided to move it up, you can see that we got a nice breakout to the upside. We want to play this as a +1. So a +1 trade is going to be a 50-52-50 bull call spread. We could play this more bullish if we wanted. We had more +2 and +3 slots available. If you want to play it a little bit more aggressive, the problem is the 55 calls don't have any value to them. So you're going to have to find another stock in the real estate sector, because this one really only has a +1 as a possibility. But VTR, July 19th, 50-52-50 bull call spread. Moving on, next to financials, we want to add a +2 to the financials. This here is new holdings, NU holdings. I've never played this before, so this will be a new one for me. It doesn't matter, it's just a ticker symbol. That's all it is. So here we have a high base pattern. We made a new high, we broke out of the base, and then we came back and we tested the breakout point. And we held that really nicely. Looks like this thing wants to continue to move higher. So we have a +2 trade on it. We're going to take a look at a July 19th, 1250, 1350 bull call spread. If you want to use a +1 slot, then you can be a little bit more, a little bit less bullish and do a July 12th, 1213 bull call spread. So it just needs to go up 18 cents for you to get a max gain on that. And you're going to have some positive theta on it. Next up, we're going to take a look at our +3 in technology. Now remember, whenever you look for a +3, you're looking for something that's going to have a big move. Earnings can be a very good thing on a +3 that you're looking for. Now look, ARM does not have earnings during this period, but this stock is one of the strongest ones. It's in the semiconductor sector. And when you go for a +3, +3 is basically saying, I'm going all or nothing, because you're going to be out of the money on your call spreads. You're going to be out of the money. So this thing has to go, or your call spread is going to 0. As you can see, we got a breakout of this base on Friday. This is in the strongest sector, and if this sector continues to run, I don't see any reason why ARM Holdings doesn't make a good run up to 200. We're not even looking for it to go to 200. I'm looking at the 185-190 bull call spread. So we're looking at basically here to here. It's got to go above 190 and close above it by July 26. If that's the case, that's going to be a really nice gain on ARM Holdings. And then last, we're looking at a bearish trade in energy. There was a lot of candidates here, but I came back to this one. This one just looks atrocious. Now, the thing I like about this was weak even when the energy sector was strong. That's showing me relative weakness. And you can see, you can call this a low base. You can call this a descending triangle. It doesn't really matter what you call it. It's basically really weak. It's really weak. And as I pointed out, the candles, look at these candles. Every day they've been gapping it up and people have been selling it off, selling off, selling off. Yes, there is support. There is good support here right around this $33. If it breaks below support, and that is the call, it's going to be breaking down below support, we should have a nice sell-off. Looking at the 33.50, 32 bear put spread. That's going to be the trade. So looking down to $32 a share, that's going to be all the way down to here. If we break that support line, I think that's a good call on this one. We could have added more slots. We could have added more aggressive slots. But you can see we've added a +1, a +2, and a +3, and a -2. So if you were to, take a look at that all together, we're adding on a little bit more bullishness. But remember, we just had some bullishness fall off. So we're just simply putting back on the bullishness that fell off of the trades that expired. We're not really leaning too far bullish because we do recognize that there is this market that is a little messy. The thing we love about having these slots is that you get to decide how aggressive you can be. Now, again, the slots will limit you. If you decide, I want to be super, super aggressive here, you're still going to be limited by how aggressive you can be. But if you just say, I don't believe this at all, I want to go short, and you adhere to your slots, it's stopping you from going short. It's literally stopping you because you cannot do it. Now, if you wanted to, you could just not fill any of your bulls, but that means that you were in mostly cash, and that's okay. That's just perfectly fine. So let's talk about wrapping this up. Will the rally broaden? Remember, 3 things can happen. The rest of the market is going to catch up to the NASDAQ 100. The NASDAQ 100 is going to have a massive sell-off. And now look, we've seen it to where the NASDAQ 100 sells off and the rest of the market gets bought. That's a possibility. That's absolutely a possibility. Or the NASDAQ 100 can just continue going up and the rest of the stuff can be in the middle. That can happen too. Eventually, of course, that will stop. But we don't know which one that's going to be. So we have to make our trades based on all 3 of those things as a possibility. How do we maximize our odds of making money in this market and minimize the damage in case we're wrong on what's going to happen? I've been trading for 27 years. I have doubted so many rallies, especially in the beginning of my trading career. I've learned the trend is your friend. And I know that's a dumb little saying, but it is so true. Stick with the leaders. They will tell you when they're done. Right now, we close on a high on Friday. It's not telling you they're done. Stick with the leaders. Stick with your strength and weakness, and stick with the charts. I promise you, you're going to do better than what your brain tells you to do. Just follow systems. Everyone have a great weekend. Goodbye, everybody.